Well, good afternoon, everybody. This is Chris Robinson, Robinson Ag Marketing. But today's post-close grain and livestock comments for Wednesday, the 15th of October. Beware the Ides of October, I guess, right? A little bit higher in D's corn today, up 3 3/4 cent, 416 and 3/4. Again, if you're not getting my letter, please sign up and take a look at it. I've got 411 as a big pivot point. 411 is the halfway back point of the last rally we had. We went from 392 to 431. Couldn't fill the gap. 411 is right back in the middle of that level, and it's something to watch. Now we can't get above the 20-day moving average. I know people are getting jazzed today. We need to get above the 20-day. Go back and look at a long-term chart of these corn. 420 has been waterboarding us. So uh, let's see if we can get it done by tomorrow's close. November beans after a 9 cent trading range. Um, Finished the day unchanged. Nice whipsaw, punished everybody, didn't pay anybody. December Chicago wheat, a penny and a half lower. Kansas City December wheat, a 1/4 cent lower. Those markets are all on their contract lows, 5-year lows. But and I do cover cotton in my letter. I've got guys down in the Delta who trade cotton with me, hedge cotton with me. Cotton is at a 6 month low. If it goes a little bit lower, we're going to be at 5-year lows as well. We haven't had a whole lot to do this year, hedge wise. Most guys, the best probably you could have done was to have hedged 65 or 70 cent, 65 or 67 cent cotton. Excuse me. We kept thinking we were going to get through 70. We couldn't. We stalled there in May. We stalled there in March, and that was it. I think a lot of guys were waiting to do stuff until we got north of 70, and we never did. So, good news is we haven't had a big trading range. Bad news is we're on the contract lows here, even after today's bounce at 63.76. So, hopefully, brighter days ahead. Um, Interesting comments today from Secretary Percent. They're talking about price floors. Now, he was mostly talking about rare earths, but they may be talking about everything. Price floors, you got to remember, if you're growing corn, your price floor used to be the ethanol demand. Ethanol, we grow 15 billion bushels. This year, we're going to grow close to 17 billion bushels. 5 billion of that every year went to ethanol. I always thought that they were going to increase that um, usage, be a simple way of doing it. There was some thought out there that the Chinese tariffs that we're getting, call them the fentanyl tariffs, right? It's $90 billion, and I guess they're doing the math program. They're like, okay, even if the Chinese bought their usual beans from us, a billion bushels at um, $10 a bushel, 90 billion beats 10 billion, right? So that's the math that they're doing. And I think when the government does get reopened, looks like we're going to have to wait through this 18th, or this left wing protest that the Democrats are waiting for. We may reopen the government after that. We got to get through their sales pitch, right? That's really what it comes down to. So we just have to grin and bear it, kids. When the government does reopen, there's supposedly between 13 and 15 billion dollars earmarked for producers. Again, this happened back in 2018, so we'll see what comes our way. It is not too early to start looking at 2026. I'm already looking at hedges for that. I've got some ideas. If you're looking for something like that, please call me. It's stuff I share with my clients. I just don't put it out here in the general airwaves. There is a little bit of value that I do add, I believe, for people that do work with me. If you're not getting my letter, sign up. It's $50 a month. You can cut it down anytime you don't want it. You can turn it off. I do provide also a weekly, sometimes twice a week, private client webinars. I just did one last night. I was up about 11 o'clock, 11:30 last night doing it. So again, I do the homework so you don't have to. I dig deep into this stuff. I try to explain to you all the stuff that I've learned in my 30 plus years of doing this, both as a floor trader, which I did for 18 years, and then I've been working with farmers and producers for the last 15. The last 7, I've been completely on my own with Robinson Ag Marketing. I want to finish up real quick with the protein complex. Uh, we did have a rarity. It's the first time in 8 days that feeder cattle settled lower, um, just barely by 0.65 cents. It's still trading at 380.675. That market has just been on an absolute tear. I did a breakdown in my letter tonight, which I sent out to everybody, comparing it to what happened between 2008 and 2016. And then, it took 8 years for that market to have that big move up. And then it took 2 years. It didn't just happen overnight. It took 2 whole years, but for that feeder cattle contract to and basically lose half of its value. I don't think anybody wants to be in a situation where we watch feeder cattle, lose half of its value, go from close to $4 back down to $2 without a hedge. So eventually, math catches up to us all, including um, every commodity. Commodities really aren't like the stock market; it's a completely different animal. And I know someday the supply will overcome the demand, and we will have a correction. You just want to make sure that you've got your protection on before that happens. It's that same old story. You want buy your umbrella when the sun's out, right? And I'm not predicting that the same thing's going to happen that happened in 2016. Don't come at me with that. No, I was born at night, but I wasn't born last night. I'm just telling you that markets tend to rhyme. They don't always repeat. But sooner or later, I would imagine we're going to have a correction in feeder cattle. It would be nice to have something protected. Lean hogs. Again, we'd had a tremendous rally, almost a $25 rally from the April low to the September highs. We had that really good pig report. What happened? We had 2 days of contract highs, and then we slipped down. The slippage, we given back nearly 38% of that rally. That's also something that's in my letter. So I put these levels in there. I hope you I help point out important levels. I actually started doing this years on the floor when I would basically write down my levels on 3x5 cards and share them with a half dozen guys that I knew. We would kind of look at each other's levels and have ideas about what we want to do with those levels. I'm just using that same experience and I'm sharing it with my clients. If you're looking for that type of help, if you're looking for an I'd say a completely non-biased approach. A lot of brokers out there, they'll just tell you the bullish story all the time. They're beating the drum all the time. There are other guys, all they do all the time is preach doom and gloom. I try and look at the reality of this situation. I work with both producers and end users. So if that sounds like it's something to interest you, give me a call, 312-638-8868. I hope you like the letter, and I hope you like the webinars that I started doing here. Again, it's a private client webinar. Sign up, take a look. If you don't like it, you can turn it off, and no harm, no foul. Have a great rest of the day.